All right, guys, welcome back here. Joseph James, School of Trade, Sideways Markets. Welcome back to your nightly newsletter. Today is already the 22nd of January. Boy, this time is flying by. Hey, I want to thank you guys so much for your patience letting me get over this little sinus bug. I apologize for the nasally voice here this afternoon. Took the day off yesterday. I am so glad that I did because I'm just about, tomorrow hopefully be back to being $1 million. But as of right now, I'm clocking in right about $725,000 right now. I'm kidding with you. I'll be back to normal tomorrow. Had a great day though today. A little bit sluggish start. Let's talk about what we have on the in the rear view here for today. Now remember, we had Monday was a holiday. Markets came back on Tuesday. We pushed a lot of the news into Thursday. So today we had our second day in a row of no major news. Let's take a look at the worksheet here today, and let's see what happened today. Well, first of all, we saw crude oil push higher. Crude pushed remarkably higher. And it was kind of interesting because this morning we're sitting here at about 8:30, 8:45, and we're wondering, is this all we're going to get today? Sure enough, didn't take long, though. Right when we went into training at about 11 o'clock this morning, bam, this thing jumps up. And remember what I said to you guys in our trade room today? Days like today, you had to wait to see when that final push was going to be made. We didn't know when it was going to happen, but it happened just before the lunchtime session this morning. And then, bam, 177 ticks up, 177 ticks on the day. I'll call that a low volume rally. We ended the day about 1.6% higher at 96.75. So we finished the day today at 96.75. Look right above you guys. That's 100, big round number right above us now. It's within striking distance. We always talk about when we get it back above 95 even, that's when everybody starts to do the math and they say, oh, there's 100 even, so 100 is likely to be the target for our buyers tomorrow. Now, we're going to take a look at this on some charts in just a few moments, but finish the day on crude 177 ticks higher, going almost 2% higher and ending the day around 96.75. Boy, we've come a long way, right, since we were down below 90s less than a week ago. How about gold today? Gold dropped 80 ticks today, right, down 80 ticks. We dropped almost 0.5%, down 30 basis points today, and we finished up about 1236.3. Gold is a remarkably narrow range right now. I mean, if you look at the chart, we're going to take a look in a second, you'll see that gold's been all over the place. I swear what's happening right now is you've got the majority of traders, everybody wants to take their foot and put it right on the gas pedal for the economy. Gold wants to fall lower. Crude wants to jump. Equities want to keep jumping. You can feel it out there in the price action. But we still have these lingering reports in the month of January. Wait a second. We talked about this last week. The month of January, what is it? It's an earnings season month. What does that mean? That means we're actually in January looking back in time at the month of December. Remember what happened at the end of last year? All that confusion about tapering and raising rates. Well, we're still trying to get ourselves unstuck out of all that kind of polarity, right? We're unclear right now as traders, as long-term investors, right? As day traders, we don't care what direction this thing goes. But for the majority of long-term traders out there, they're not going to let go of the bearish card, right, until they got their hand on the bullish card. So we're not quite there yet, right? We're not quite out of the woods yet as far as the unbridled bullishness, right, that definitely looks like is on the horizon here. Everything looks to be improving in the economy. Today we saw the Russell went higher again, another 100-tick move on the Russell. A little over 0.5% today on the Russell, closing out at 1179 even. So we had crude rising. That obviously is reacting to a bullish sentiment in the market. Gold falling. Again, all of this bullishness, it's showing through, guys. Equities are rising. Commodities are rising, with the exception of gold. And we all know why gold will be falling lower is because obviously when people are confident, they're confident in the U.S. dollar, they're going to drop their gold. And of course, we've seen that consistently across the board. No major news today. add in and I still can't believe you guys. I feel horrible. We got a heat wave here in Los Angeles right now. It's 85 and sunny. I feel horrible, but boy, it has been cold and snowy across pretty much the rest of this country, with the exception of Los Angeles, San Francisco, and Miami. It's been pretty darn cold and very snowy. I know a lot of our members have been shoveling themselves out the past few weeks. So when you combine a day without any major news, you combine that with a winter storm, and boy, you got a recipe for some low volume today. In fact, we traded 6% below our average daily volume on the New York Stock Exchange. That low volume made us stay patient this morning. I'm looking back through my notes from today's trade room, and all over the place here it's saying we're not getting anything moving well. We got to wait patient for the patterns. So today was just a great example of a no major news day. We had that winter storm. Maybe some of us came down with some sinus colds over the weekend. But bottom line was, though, tomorrow we're going to get all of that news crammed into Thursday morning. So don't forget tomorrow morning. We got 8:30 news, 9 o'clock news, 10 o'clock news, and then we've got API number tonight for crude oil. Tomorrow we're going to get inventories. Now, this is that age-old story. If Monday's a holiday, Wednesday's inventory report usually gets pushed back to Thursday. So nothing new here. Monday was a holiday. Today being Wednesday, we know that's usually going to mean we have inventories today, but that got pushed back right to tomorrow. So 11 o'clock tomorrow for inventories. Okay, we'll hear from the DOE tomorrow, 11 o'clock. The API, right, the American Petroleum Institute inventories, 4.86 million, the first build in 4 weeks. Now, what does that mean? That means that inventories have been in a draw the past 4 weeks. If you've been watching this newsletter, if you've been watching the reports, we've had lower than expected inventories, which you know what happens, right? What does it mean when inventories are lower? Well, one of two things. Either not enough supply or too much demand. So the last time we saw crude oil inventories, what did we have? We had a draw on inventories, which means we had lower inventories. We followed that up with a DOE reading last week, one of the most bullish reports we got in a long time. So this is why crude is pushing up towards that big round number of 100 even, and again getting above 95 and staying above 96 today. So we'll be interested to see tomorrow what happens. Tonight we hear from API number. This is the first time in 4 weeks we've seen higher inventories. Is that going to push that price back lower again on crude? We'll be watching tomorrow morning to see what happens at 11 o'clock, so be ready for that. Earnings season continues. Today we heard from IBM, we heard from AMD, we heard from Texas Instruments. Guys, we heard from a lot of the big name retailers in different sectors across the New York Stock Exchange today. And these earnings seasons continue. Remember, it's the month after the end of each quarter. Okay, so we got one in January. The next one will be in April after the month of March, right? March is the next quarterly finish. So we know that we got earnings season continuing. That's why these E-minis are so volatile right now. So enjoy it while it lasts, guys. And we kept hearing today from politicians. They continue to kick that can down the road. We've been wondering if they were going to comment on raising interest rates in 2014. It does not look like here, whether it be European Fed, the ECB, whether it be here in the U.S. We've got a changing of the guards here. Janet Yellen's going to be coming into office. She's already been appointed. She'll be taking role here next month. So we are just about ready to get through that month of January into February, and, well, it's going to be a very interesting first quarter of 2014. Now, we're just getting started, guys. Again, welcome back here for our nightly newsletter. Let's double check and see what the charts are telling us for tomorrow. All right, guys, let's not waste any time here. Let's roll those sleeves up, and let's take a look at what these charts have in store for us for tomorrow's trading session. Before we jump into the charts, though, let's make sure we're ready technically here for the news tomorrow. Now, while I've got your attention on our blog, I do want to remind you here, folks, that if you haven't registered for our nightly newsletter, here's your chance to do so right on the left-hand side of the blog where it says Nightly Newsletter. Now, I've also got a special treat for you. If you're not a member of mine yet, I'd like to invite you to come attend our live trade room in the afternoons. Monday through Thursday at 2 p.m. Eastern Time, we open up our trade room for non-members, right? That means you. If you're not a member of mine, you're a non-member. Go ahead and give me your name, email address, and if you'd like to, give me your phone number, and we'll give you a call and give you an orientation before the call starts. All right? Don't forget to give us your information there, whether it be for the newsletter or to attend or to get a free guest pass for our live trade room. So, talked about this earlier, crude pushing higher, gold pushing lower, Russell pushing higher. Everything looks to be bullish for U.S. market sentiment. Let's take a look now at tomorrow, the 23rd of January, and let's see what we have in store for our day of news. You can see right away here we have 1, 2 red star news events, and then we've got a couple smaller news events. We got inventories and we've got the PMI manufacturing index. Now, I've said this many times before, I'll say it again, news is noise. News is noise. There are really only 2 news reports that I care about, and that would be non-farm payrolls. Okay, those happen first Friday of each month, and also the FOMC announcement. Okay, those are the 2 news reports that have the ability, not a guarantee, but have the ability to really move these markets. And that's the most important thing that we want to keep in mind, right? We only want to pay attention to stuff that matters. And so what I'm going to do here is I'm going to trade around all the news, but I'm not going to try to read into it too much. So I would encourage you guys also, don't stress out too much about the news. Just know when it is. What I'll do is I'll set my alarm 15 minutes tomorrow before each of these news events. Now, inventories tomorrow at 11 o'clock. This is really important because crude oil traders, we know that usually on Wednesdays, this week is on a Thursday because of the holiday, but normally though, we are going to see some sloppy price action before the inventory number comes out. So we'll probably see a little bit more of that tomorrow before 11 o'clock. So if you're seeing crude trading a little bit sloppy tomorrow morning and you're wondering, man, what's going on? Why is it so inconsistent? It's because of inventories at 11 o'clock. The big news, though, tomorrow is going to be jobless claims. Is our first red star news of the morning. So be ready tomorrow morning, bright and early, for a very good opening bell. We got PMI manufacturing at 9 o'clock. Existing home sales is another red star news event. So you can see here we got red star news at 8:30, red star news at 10 o'clock, and that's going to be really important because remember, red star news events are always going to get us going, right? They're going to get us moving in some direction. We don't care what direction, but as day traders, we always look for something moving. So we get more volume, more volatility, right, at 8:30 and 10 o'clock tomorrow. One more thing about red star news, we always try to leave a runner. So if you can leave a portion of that trade, if you can get it on the right side of it, definitely try to leave a portion of your position open because those red star news events are going to make it really easy to catch a runner. And then last but not least, again, we talked about this a moment ago, but if you're trading crude tomorrow, definitely going to expect to see, right, can't guarantee anything until we see it, but we can expect to see the best moves after 11 o'clock Eastern time tomorrow morning. We definitely be looking at crude before 11 o'clock, right? We'd be foolish not to, but if you're wondering, kind of scratching your head and thinking, man, why isn't it moving very well? You know why. All right, so be ready for anything tomorrow. But most importantly, though, don't be surprised if crude's a little bit sloppy there before 11 o'clock inventories. So now you know what tomorrow's news looks like. Don't say you're not prepared. Let's keep moving. First things first, take a look at our anchor chart here on good old crude oil futures, the good old black gold. And what do we see here? Well, first of all, we can see a nice strong trend, right? Nice big strong trend channel on this. We call this a triple threat. Threat number 1, long-term bullish channel. Threat number 2, short-term channel. And threat number 3, we got a green cloud and we're above all the moving averages. Guys and gals, that gives us a green light right now to get buying long here as soon as we see the next wave pattern trigger. So you guys get the green light here now on crude. I do have a little bit of resistance over here. And so you can see 96.81. This is going to be your big resistance level here right now. And this has to do with an extension that we found, right, off of a previous swing to swing. So no surprise there. Crude jumps all the way up to an extension resistance. What I want to see next is I want to see a new higher high, and then we're off to the races with those wave patterns getting long here on crude. I would think, though, that it's probably going to pull back before it goes higher. So I'm looking to buy 96.28, 95.85. I will also be looking to buy the lows of this channel, okay, which by the time it pulls back there, it may not be 95.85. It may be 96.15, okay, so just be aware. So we're going to buy these support levels here, including the low of the channel. I've got 95.68, 95.30, and 94.99. Now, get me below 94.75, and now those buyers have officially failed, and we're off to the races to the downside. Most important thing here is, what's my long-term trend? We're bullish. With that bullish trend, what do I know? What is the strategy for a bullish trend? Buy. But where do we buy? Am I going to buy at resistance? Certainly not. We're going to buy at support. So as this price falls, I'm looking for buying opportunities as we go lower. Again, just like I said before though, if we get below this zone here, now those buyers have officially failed completely, and we're now shooting for 94 even once again as we go lower. As you can see, though, I don't have a lot to work with on the upside right now. That's because you'll notice right here, we didn't get a lot of consistent moves. It pretty much just took off this morning and just never looked back. So we're going to wait here a little bit tomorrow morning. Again, new higher high, though, get me above 97, and I am off buying pullbacks here on crude. But I wouldn't be surprised, though, if we pull back a little bit before we then start going higher again. All right, just give me some room to breathe between the current price and this 96.81 resistance, and I think we're going to be just fine. All right, so as it goes lower, I can trade short if I'd like, but let's take a look here now at the VIP chart. Let's see if the VIP chart's giving us any clues here. First of all, the VIP chart, now don't forget we're trading the 314 contract on crude, guys. This rolled over last week. 314 contract on crude. Don't forget, there's tutorials on the blog, Sideways Markets, if you want more information about how to find those, how to properly prepare for contract rollover. Let's take a look at this. First of all, a 2-day relationship is bullish, right? Very easy to see. Now look at that. That's an unfilled gap right there, guys. These unfilled gaps are really, really important. You get a big unfilled gap here. Usually unfilled gaps are business that has not been finished yet. So expect to see at some point to get that gap filled. I'm not much of a gap trader because they're not very consistent from day to day. But we do see a gap there, and those gaps do tend to get filled more often than not. So 2-day relationship is bullish, right? That's the first bullish clue we see. What's my range? Got a very wide range, right? When I compare today's range with yesterday's range and the range before that, what do we see? We got a pretty wide range. And then last but not least, where's my closing print? Closing print near the highs. That's my second bullish clue on this chart alone. We already know from the anchor chart that we're bullish. We get a 2-day relationship that's bullish. We get a closing print that's also bullish. What's the next step? The next step is we're going to see what tomorrow's opening bell has in store for us. Remember, everything we talk about is only as good as what happens between now and tomorrow morning. This is crude, so it'll be 9 o'clock Eastern time. If we open up above 96.89, we're looking to be buying tomorrow. If we open up below 95.64, we know we're bearish. We got a previous week high right there for the taking. So what I'd be looking for here is I'd be looking for price tomorrow morning. Are we going to open up 96.89 or higher? Are we going to open up below 95.64? Are we going to open up inside the range from yesterday, which of course is today, but we're talking about for tomorrow? If we open up below 96.89, above 95.64, here's where we get some big clues here. Very wide range today. That wide range today usually tells us that the traders who were participating today in this market are probably going to be due for a little bit of a break. So tomorrow we can expect to see some range-bound trading with this wide range today. Wide range today, narrow range tomorrow. Narrow range today, wide range tomorrow, right? Pretty simple and straightforward. So we're looking bullish on crude. But remember, if we open up inside that range, we're two-sided. We're going to buy lows and sell highs. Sell highs and buy lows. If we open up inside, if we open up below, we're bearish. If we open up above, we're bullish. Now you know here for tomorrow on crude. Let's keep going. Moving forward here from the black gold to the gold. Let's jump in here now to gold. And first thing we're going to do is we'll take a look at the anchor chart. Now, the anchor chart, you'll notice here, we are bearish. We got not a triple threat here. Actually, yes, we do. We got a red cloud, we got a red long term, and we got a red short term. So triple threat here to sell short on crude. We are below all the moving averages. That tells me that right now my members have the green light here to get short. So the green light to get in the red, right? So we know that we've got this lower low here. Now, looking at the support levels down below, again, we get the green light we need here to get short. We're below all the moving averages. We get a bearish channel, get a bearish trend. What we may see happen, though, is we may see this price go higher, right? Test some of these moving averages as resistance and then go lower. So be ready for that short right now. As of right now, we are ready to get short here on gold. As you can see below me, I got targets here at 34.9, 32.6, and 30.1. And then look at the wide open space that we have here now, folks, down to that 21.7. So we get a big wide open space here. Again, I would expect to see price move higher before it goes lower. We're taking profit targets off at the levels listed here below. I'm also going to have my eyes on that 1221.7. If we get below this 1230.1, guys, you know we're off the races now, and we're hunting for that 21.7. That will be our runner target tomorrow morning if we can end up below that 1230.1. It's got some serious potential. We've talked about those bullish clues that we've been receiving from the overall economy here. Earnings season, equity markets going higher, crude pushing higher, the threat of interest rates being pushed back 2015. All of that's going to be good for the U.S. economy, and that means bad news for those gold traders out there who are trying to keep this thing going higher. Now, if for some reason, if we go higher before we go lower, again, as we always say, sometimes these markets, before they want to go lower, they got to go higher here first. I've got a couple options here for us. Now, we had kind of the high here, that most recent swing high here was at 44 even. So that's definitely going to be a spot here if we go higher, right, to then look for a reversal and go lower. We may also, once we get above that 44, I can probably squeeze in a long trade here. But just be aware, though, if you're going to get long above 44 even, just remember, though, 48.6 and 51.7, these are going to be targets for you. Again, if we do end up going higher, though, got to be ready for that reversal as we continue back to the downside. Okay, a very easy to see scenario tonight would be to have price flutter up here above the 44 even, get up into this sell zone here, and then tomorrow morning watch the U.S. traders grab it again and start pulling this thing down again, right? So last call here for sellers will be 58.9. So as we go higher, again, I can look to buy above that 44 even. I can look to buy above that 51.7, but man, it's going to be a little bit tight in there. We might get a chance to find some buying opportunities between these, right, between these zones here. But again, you're kind of going against that long-term trend here. So better off for us to wait, sell at the resistance levels that we see here overhead. Again, we get up to that final zone here. I'll have some new levels of support down here tomorrow morning for us if we do end up that high. So make sure, members, come in and see me tomorrow in the trade room. If we do go above that 1251.7, I'll give you guys some new levels to be looking for tomorrow morning, right, as targets for our shorts. Again, get me above that 58.9, though, and now those buyers are back in charge, and we're headed up there, right? Get the high all the way up here. See that high up top here? You got about 62. So 62 is going to be a good spot here. That'll be a great target for you if we do end up going, again, above any of these zones. Make sure you take some profit, though, at the overhead resistance. We are in a downtrend right now, and that will help keep you out of trouble. All right? Looking for a short here. We get the green light right away here on gold. But let's take a look at the VIP, because the VIP chart, last time I looked at it, was a little bit concerning here. Let's take a look. Now, huge gap down. Look at this huge gap on the VIP chart. Has not been filled yet. Basically, that is last Friday, right? Skipping all the way down here to last Tuesday, or to this Tuesday, I should say. Sorry, I got medicine head here from being sick over the weekend. So big gap down, and that gap never got filled. In fact, we never even opened above. We never got above yesterday's range. So let's take a look at this now. 2-day relationship, sideways, right? Nothing bullish, nothing bearish there. What's my range? Very narrow. And then where's my closing print? Closing print also at the lows. So we get a big gap down that was never filled. In fact, not only was it never filled, they never even tried to get that gap filled. Okay, very, very weak to the buy side. We assume it means strength to the sell side. Now we have, of course, a very narrow range today. What does a narrow range tell me here, folks? Narrow range today tells me what for tomorrow? Wide range for tomorrow. Okay, so narrow range today. Most important thing about today's range was where it closed. It closed at the lows. So we've got two bearish clues on this VIP chart. Okay, big thing is that narrow range today, along with the low closing price, that tells me that we are most likely with an opening print tomorrow below 38.1. Remember, everything now on the line here, what happens tomorrow morning. So we get an open above the 42.7. Guys, if we open tomorrow above 42.7, can you guess at all where we're going? Yes, we're going to fill that big gap, right? All the way up there to 1253.3. But what if we open up below 38.1? What if we open up below the closing print from today? Well, that means another day here where we're not going anywhere near filling that gap. We're going to immediately sell here off down to 35.1. And I got my eyes on that 33.5. That's the prior week's low. As we go lower, we can see here we get a lot of wide open space down here. Look at all the wide open space. Remember that last chart? What did we say before? 22.1. There's 22.8. So we can get below these levels, guys. Look out below. We get a lot of wide open space here. All right? You can see how that lines up almost perfectly with that level here. It was 21.7, excuse me. So I got my eyes here with that narrow range today. Bearish clue at the closing bell. We know tomorrow really could be a bloodbath out there for all those gold traders. We'll have to wait and see what happens tomorrow. 8:20 a.m. is when they open the pit on gold, and we'll be watching closely to see what the opening print looks like. But it's easy to see, though. We get below the prior week low, and look out below, down to that 22.8, and we will be selling aggressively with an opening print below today's lows of 38.1. Last but not least, we can't forget about the mighty Mini-Russell. That mighty Russell is a great illustration of the bullishness of this market personality right now. I don't care what E-mini you're trading. I don't care what stocks you're trading right now. Some people say there's no other options besides U.S. equities and European equities. Some people say that because the Fed funds rate is still pegged at zero, there's no reason to be saving our money right now. So you might as well invest it in real estate. You might as well put it in the stock market. That might be what Mr. Bernanke and Ms. Yellen are trying to accomplish. Either way you slice it, though, we continue to see bullish clues out of the market. Remember, some of the easiest ways to tell when we're in a bull market is when good news is good news and bad news is good news, right? So when we see some bad news tomorrow, if you see those equity markets just shrug off that bad news and keep on going higher, we know what that's telling us. Looking now at the Russell anchor chart, what do we see? Triple threat. Same thing we saw in gold. Long-term trend higher, short-term trend higher, green cloud, above all the moving averages. Guys, this tells us locked and loaded, you're ready to buy right now on the Mini-Russell. What I'd like to see is I'd like to see it come off these highs a little bit, give me a test of 75.7 before we go higher. I got targets up top here at 80.3 and 83.3. I've also got one more up here, I believe. Yep, at 87.1. I am a big believer that it's easier to buy as price is going lower, right? You may disagree with me on that, but that's why we buy pullbacks and we sell retracements. So I'm never going to try to buy the high. I want to wait to buy here now at what we call a turning point in our live trade room. So a turning point below me is going to be 76.4. 75.7, 74.7, 73.2, and then like we always say, eventually here, we're going to have to give it back to the sellers. If we get below 72.3, guys, you got it. Sellers are back in charge, and we're going to most likely tumble here pretty quick. I get a low of day today at 69.2. We get a prior week's open at 65.6. These are some easy levels we'll use as profit targets. Bottom line, though, we get a bullish trend here on Russell. If the price pulls back before it goes higher, I'm looking to use any of these support levels below me as areas for a reversal, followed by an entry pattern. If we go higher without pulling back, you got to be careful here. You don't want to butt your head against that resistance overhead, and you can clearly see that that was accurate resistance because look where we stopped trading today. What I would do is I would be very careful trading right now. I would wait for a new higher high and then go out and grab your entry pattern. Just make sure your entry pattern gets you in long above the 80.3, right? The worst case scenario would be to see it go higher, pull back, then try to go up into that 80.3 only to run your head into a brick wall and have it come back down again. Remember, a bullish trend tells me to do what? It tells me to buy. But where do I buy? Do I buy at resistance? No, I buy at support. Every level of resistance also becomes support. So rather than trying to force yourself to go long here into that resistance, just wait patiently, wait for it to get through that resistance. It will turn to support. Those same sellers who were trading against you are now going to be buying as that resistance is breaking down. So as we go higher, I'm not buying directly into resistance. I'm going to wait for price to break through that resistance and then give me an entry pattern long above that level of previous resistance. I would love, though, to see price go lower and then go higher today, or tomorrow morning. So I'm looking for those entries around the levels that I've defined here for you already. This is our anchor chart. This is going to give us the most amount of information. But I'm still curious here what's happened on the VIP chart before we wrap things up here today. Here's my Mini-Russell VIP chart. First of all, let's see if we continue to see the opposite of what we're getting out of gold. Remember, gold gave us all bearish clues. What are we seeing here? Two-day relationship is bullish, right? Higher highs, higher lows. Very easy to see that trend continuing. The range today was pretty much typical, right? Now, if you want a good laugh here, there's Monday's holiday trading range. That would be just a little bit narrow. We obviously won't use that, guys. Don't use holiday trading sessions. No volume there. But this is going to be about an average trading range. You can see we're just about average, just about typical trading range. And then last but not least, what's the closing print? Another bullish sign. So day to day, we are bullish, right? Multi-day, right? Really multi-week, we are bullish on Russell and pretty much everything else right now. We see a closing print at the highs. That's another bullish clue. Now, the only thing that I don't like about this is that typical trading range. All right, that doesn't really give me much of a clue right now, but we know, right, that if it was a narrow range, we'd expect tomorrow to be a very wide range. If it was a very wide range today, we expect tomorrow to be a narrow range. We don't really have much to do with the range clue. But everything else, though, says rising prices. Bullish closing print, bullish two-day relationship. You know what the next step is. You get it. We've got to wait here for tomorrow's opening bell at 9:30. Are we going to open up above? Are we going to open up below? Are we going to open up inside? If we open up above 80.1, we're going to be bullish tomorrow morning. And remember, just because we open up does not mean it can't pull back before it goes higher. That's very, very common. So the opening print's a big clue. If it opens up above 80.1, we're buying tomorrow morning. If it opens up below the 71.3, we are bearish. Again, same thing if we gap up. If we gap down, don't be surprised if price comes up a little bit before it goes lower. All right? We're not saying that if we open up below 71, it's going to be a straight line down. What we're saying is if we open up below 71.3, don't be surprised if price goes higher before it gets enough steam now, right, to finish its move going lower. All right? All signs, though, right now point to a very bullish economy here in the U.S., which, of course, is resulting in lower price on gold, higher price on crude, higher price on Russell. As we always keep reminding you, though, we're only as good as tomorrow's opening bell. So come out and join me tomorrow morning as a new student. Our live trade room opens up at 8 a.m. Eastern Time, Monday through Friday. Once again here, guys, head over to the blog here at Sideways Markets. Don't forget to join our newsletter. Don't forget to register for your free pass to attend our trade room this afternoon. And we'll see you guys here tomorrow morning. And our live trade room opens up, you guessed it, at 8 a.m. Eastern Time. Signing off for now, guys and gals, from the entire team here at our corporate office in Los Angeles. Remember to learn it so you can earn it. Adios, amigos. Bye-bye for now.